afternoon. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. Of course, here on Wednesday, we're here at 11 o'clock live here at Robat TV. Just a programming note here off the top of the show. Tomorrow, we're going to try another 7 a.m., of course, pre-business market day or show. We've enjoyed them. And on Tuesdays, the last few weeks, and we see the ratings out there. We see you guys watching. We see the feedback as well. So we're going to do another one tomorrow here coming up. So join us tomorrow, 7 a.m. live here at Robat TV. Of course, then we put it out on demand here at Robat TV, the YouTube page as well. But that's coming up as a programming note. But here today, we're waiting on the Fed decision, which we're pretty sure it's going to be kept where it was. That'll be our top story here. We won't get the answer here today during our show. It'll probably come out around noon if I had to guess. That's the expectation. So what's the market doing? Let's check it with the Market Watch. And some positive news, I guess we could say out there. Dow Jones is up 29 points here today. Everything is just kind of here today, waiting for this Fed decision, which everybody's expecting the Feds to keep rates where they are, right? The S&P 500, here's an interesting note. Right now it's down the 5 points, as you see on your screen, to 69.73. It actually touched 7,000 for the first time ever earlier today before it kind of retreated back here to this 5 points down that we're looking at right now. So it did hit that new record of 7,000 earlier today. NASDAQ, well, you don't see it on your screen there because we have a system issue here with them, but they're up 17 points today as well to 23,834. For the NASDAQ, the Russell 2K, well, they're down 11 points right now, 11.40, 2657 for that small cap index. So not a lot of movement today. Everybody's just kind of waiting for the Fed decision. So in about an hour, when that does come out our time, well, you'll see the markets kind of move here, whether there's a surprise cut, a surprise raise, or just the expectation being what it is. Of course, Bitcoin today, well, getting closer to that 90,000 level here today, 89,634 for Bitcoin is what we're looking at right now. What we're waiting for also in the market, besides the Fed decision, today after the bell, Tesla, Meta, and Microsoft, they all report their numbers after the bell here today. So the market's waiting for that as well. And then they're definitely waiting for tomorrow. Apple reports after the bell tomorrow, coming up as well. So just things we're waiting for here in the market. As you see, it's just market's just there today as we look at it. In terms of stocks we're paying attention to right now, first one, Intel. Big presence here in Arizona, specifically down in Chandler. Up big today, 10.63% as of this moment. Well, there's a report by DigiTimes out there, that reporting. It says NVIDIA is going to shift chip production, if you can say that, shift their chip production from Taiwan Semiconductor Manufacturing, and they're going to shift it over to Intel coming up in 2028. So that is why Intel is up 10.62%. Interesting enough, Taiwan Semiconductor, I looked at them. We don't have them for a graph for you. I looked at them about an hour ago, 30 minutes ago. They're up about 1% today, even though reportedly they're losing some business here coming up in 2028 to Intel. AT&T's up next for the stock we're paying attention to, and they're up big today as well for them, 5.11% up right now. They issued annual profit guidance. Well, that is above the market's expectation levels. AT&T did say it expects 2028 free cash flow to surpass $21 billion. The estimates from the analysts, $19.61 billion. So almost $2 billion, right? $1.5 billion increase here in that number there. So obviously investors like that. That's why they're up to 5.11%. But they also said they plan to buy back about $8 billion of common stock this year. I've seen the number between 8 and 10 billion. 3 or 4 business sources say 8, so I went with the 8 billion number, but I did see a couple people say $10 billion in buybacks coming for AT&T this year as well. Next up, we're going to look at another large company out there, but this time, maybe you stopped there this morning. We're talking about Starbucks. They added a big amount for them as well, 2.04% as they're trying to revive their company from the doldrums that it was in before here. And they're doing it, folks. This comeback for Starbucks is alive and well. They reported store traffic growth for the first time in the last 2 years. Here's their exact quote: "Our Q1 results demonstrate our back to Starbucks strategy is working, and we believe we're ahead of schedule." Unquote. That's what they said in a statement to those numbers out there. Obviously, if store traffic growth is up finally after 2 years, means more sales out there. And investors like that a lot. So that's why Starbucks is in the news, 2.01% up here today. Later on, when we come back and look at the market, for the final time here on this Thursday, where we're going to look at VF Corporation. That's Timberland, North Face. We've seen a lot of these apparel clothing, specifically, winter ones, facing some adversity here the last couple of days. So we're going to look at VF Corp, Seagate Technology, and Western Digital as well. Storage companies out there. And then we'll end up with another chip manufacturer. Intel's way up today. We'll look at Texas Instruments as well as a chip maker and see where they stand coming up as well. But obviously today is a big day here on this Wednesday. We're waiting for the Federal Reserve and the officials there to come out with their decision. We won't get it during the show. It'll come out after the show here today. I like it when we're on Pacific time frame just because we do get the results during an 11 o'clock show out there. But the expectation is we've said all week and definitely today, the expectation is they're going to keep that short-term interest rate unchanged here today. Obviously, they had 3 cuts last year, but if they keep it at the level it's at now, they're going to ignore huge pressure to continue lowering that interest rate, which, of course, that pressure comes from not just consumers, but also the White House wanting those cut as well. So now, if they keep them unchanged, that just means they're going to say, hey, we want to see how the economy continues to work, right? How the economy evolves out there. Of course, their reductions last year, they were intended to shore up the economy and prevent a sharper deterioration that it would happen throughout the job market. But then hiring slowed down to basically a non-existent level, with all the tariffs going on last April. And then there are signs, though, that unemployment has stabilized. So we have the no hire, no fire economy is what they're calling it. And the economy could be picking back up. There are signs of life out there for the economy. But at the same time, inflation is stubbornly high and will not go down at all, right? 2.7, 2.8% is what it's fluctuating kind of around. And the Fed wants it closer to that 2% target out there. So all of those factors together is why everybody thinks that Jerome Powell and the Fed's decision makers are going to keep it unchanged moving forward. What investors are looking for, and we're going to see some movement here, is everybody's going to be paying attention to, and this is more so than anything else that's going to happen today, how long the Fed is going to remain on hold coming up. I've seen stories leading up to this week and the Fed meeting. I've seen stories where the expectation is only 1 cut here in 2026. I've seen a couple sources say 2 cuts this year would be the most, and that's it. So there's going to be a lot of paying attention to what Federal Chairman Jerome Powell says after this. Does he hint? Does he say how long the Fed will remain on hold? Does he give any indication of that at all? That's what the investors are going to be paying attention to as well. And don't forget, there's a big split between the Fed's voting committee here, right? The numbers aren't coming unanimous anymore out there. So some officials oppose the further cuts until inflation actually comes down. And there are people on this Fed committee that do want to lower rates to further support hiring and get the economy humming a little bit quicker out there. They vote separately. It's just who wins out is the question here today and moving forward for the rest of the year. So that's what the market's waiting and listening for as well. So any news that comes out during the show, obviously, we'll bring that to you here at McCollum on Business. If not, we'll have follow-ups tomorrow morning at 7 a.m. for our morning show here tomorrow. So come join us, would you? Now, interesting enough here, right? We had a big housing issue back in 2008 with that big market crash out there. And I've been reading lately that a lot of people are talking about how we could have another market crash here coming up in terms of mortgages and housing, the housing world that we're all living in. Then I see kind of stories out there lately talking about how we can go that way. And This one here is about there's a coalition of advocacy groups, a lot of them, by the way, and they're urging the Trump administration's housing regulator, which is Bill Pulte. They want him to proceed cautiously with changes to mortgage credit score rules. This advocacy groups are all joined together, and they're warning that these new credit score rules, well, they could increase the risk of another taxpayer-funded housing bailout that happened back in 2008. So this advocacy group put out this letter to Bill Pulte, as I said. He's the director of Federal Housing Finance Agency out there. By the way, we're not talking about two, three, four advocacy groups. 35 groups put this letter together. They laid out three specific points to address as the Trump administration works to make homes more affordable nationwide. So they're basically saying, be careful. Last time we did this, we had huge issues, right? The Trump administration's plan to let lenders choose between traditional and new credit score models, well, they're saying they must be handled carefully. The group warned that poorly designed changes could complicate mortgage lending, distort pricing on the market, as well as weaken the financial footing of the two government entities, right, that buy mortgages. That's Fannie Mae and Freddie Mac. This advocacy group also in this letter said that the new credit score model should be rolled out at the same time. They said that staggering the implementation of these reports, of these credit scores, well, it could increase costs for taxpayers, even lenders and borrowers. But they say more importantly, it makes it harder to accurately assess mortgage risk. The group also asked that the agency release previously undisclosed data used to evaluate new credit score models. They say that greater transparency could help lenders and even other stakeholders transition to this new system. Remember, they want to go away from FICO. They're including Bitcoin into this deal and other things. Those are the credit score changes that this group is specifically talking about. This group went on to warn that previous administrations rushed into policies that pushed unprepared borrowers into home ownership. You know, we know that if you're around for 2008 or old enough to remember it, a lot of people were buying houses with mortgages they shouldn't have been, and it all went belly up, right? As they couldn't afford it as the economy kind of changed on everyone, which led to that widespread mortgage defaults back in 2008. So we're seeing more and more conversations about these types of warnings from groups, and a 35 coalition group sending that notice out as well to kind of, just say, hey, caution, guys, don't rush into, because everybody wants home ownership and homes to start moving, because that's when the economy is really going to pick up. But if you do it wrong, we'd see another 2008 situation happen again here in the United States. And this is an interesting one as well. I was thinking about this earlier this week. Remember back when the Supreme Court granted that really, really quick hearing over the tariffs out there, like are tariffs legal or not? They had that hearing fast. It was beginning of November is when they had that hearing, and they rushed that hearing. They were supposed to come to a resolution and have a consensus, a report out on how they're ruling on it fairly quickly, is what you would assume since they rushed the hearing, right? And even then, both sides wanted a speedy answer to the are tariffs legal or not. Remember back then, Trump's lawyers told the Supreme Court that speed was of the essence on the issue of tariffs because it's kind of holding the president's economic agenda kind of hostage while waiting for this decision. The lawyers did point to a statement from Treasury Secretary Scott Bessent where he warned that the longer the final ruling is delayed, the greater the risk of economic disruption. Isn't it interesting? It's January 28th today. Their rumor was they were going to have it out like a week or two ago. They delayed that out there. And now 3 months have elapsed since those arguments were rushed back in this tariff case out there. The court isn't scheduled to actually meet in public for more than another 3 weeks on top of that. So nobody knows what's going on. Some people speculate the longer the decision means they're going to rule against President Trump, and so they're going to delay it as long as possible. Other people say that there's such a disagreement here between the justices that's what's delaying it. Some people say that they've already ruled that the tariffs are legal, and the majority's out and have their thing. But then the people on the other side, the dissenters, are slow playing the dissenting side, but no one actually knows what's happening in that Supreme Court as well. We do know that during the rushed hearing, several of the judges did express skepticisms about the Trump the tariffs legalities there in November. They were questioning it. So now, interesting enough, so I looked up what is the timeline here for deciding cases. Well, they 3 months is a long time for a rushed hearing, but overall, if it's just a normal hearing, 3 months is probably a little bit short, right? That we're looking at, and so the question here is because the hearing was rushed, why is it taking so long? If this was a normal hearing that they would normally go through, 3 months isn't anything to bat at. So the time frame doesn't point to one outcome or the other. Is what we're looking at. So much so I looked up here. So over the past 20 years. The average turnaround time for a Supreme Court opinion, well, it's just over 3 months is what it was. That timeline, though, has increased in recent years. A lot of times they'll hear cases, not put out a ruling until June, even if they hear it, end of the 1 year, and they won't release the hearing until June, unless it's an emergency case out there. So we're in the time frame except for the rushed one, other rushed ones. Gore v. Bush and that presidential one. Obviously, a day later they had it. So if they needed to rush, so it's either they're having a hard time deciding on how to rule, or there's some dissension in there, or they don't view it as an emergency to rule on this. Either way, moving forward as well. So it's just interesting with how fast they rushed that hearing, and we're seeing more and more people ask questions on what's taking so long on this tariff side of things. So. Uh, Consumer confidence is always in the news, especially these days. We just talked about it earlier with the Fed keeping the rates the same because of the inflation staying, stubbornly high there at that 2.7, 2.8%, among other factors out there. Nobody's sure on the economy in terms of jobs. Well, now we got the conference board, and they're reporting here on consumer confidence. It was released earlier today, and it's the preliminary consumer confidence reading for January. Here's what that report showed. Well, it showed a decline by 9.7 points. So now it's at 84.5 is what the confidence report is. That is against a upwardly revised reading of 94.2 back in December. That's a 9.7 drop here in consumer confidence in the month of January. The December revision, well, it flipped the initially reported decline to a slight increase, is how that was revised up. They revised it later with additional data. So the January data did show confidence resumed its decline moving forward. Like December showed a decline, and then they reversed it a little bit. Now January is still showing that decline. So the 84.5 preliminary consumer confidence reading for January, well, it was the lowest since the consumer confidence index dipped to 82.2 back in May of 2014. It even fell below the worst readings of the COVID-19 pandemic years. That's how far consumer confidence has fallen out there in January. The Confidence Board's present situation index, if you don't know what that is, I'll just tell you here. It measures consumer views of current business and labor market conditions. Basically, what's happening right now. It fell by 9.9 points to 113.7 in January. Yeah, perceptions of business conditions and employment, yeah, they both dipped lower as well. So this report showed the expectations index. That's based on consumer short-term outlook for income, business, and labor market conditions. It declined even by 9.5 points. It's now sitting at 65.1. That's well below the threshold of 80 that usually signals a recession is ahead. Yeah, we're well below the recession level, folks, in terms of this reporting. Expectations for business and labor market conditions 6 months ahead, they also slipped further into the negative territory, but the outlook for household incomes became less positive as well looking forward. So it's a big deterioration in the Confidence Board's overall consumer confidence index. And this is alarming here, folks. It was broad-based among respondents. So what they do is they got Democrats, Republicans, and independents doing their consumer confidence side. So they can break it down into specific categories. The sharpest decline was among independents out there in terms of these numbers. Not the Democrats, or of course they're not in in control right now of our government. That had the biggest decline. It was independents out there. But even then, if you want to look at all age groups and income groups, well, they all slump, folks. Every age group, every income group, well, the confidence slumped for everyone. Consumers under the age of 35 were more confident than their peers that are 35 and older. Gen Z was the most optimistic of all generations in this specific survey for January. Among income groups, consumers earning less than $15,000, they remain the least optimistic moving forward. So, consumer confidence, at least the reporting on it, is not optimistic. I guess is the word I'm looking for. Moving forward, it's not a shocker. We've seen these numbers, and they're getting worse and worse here as January has happened here of 2026. And I can understand why, because here's a bunch of stories of layoffs coming to big companies out there. There's a franchise owner out there, a restaurant franchising company. It's called Fat Brands. They own many popular fast casual chains. You know, Fat Burger, Johnny Rockets, Twin Peaks. Well, I don't want to call it Fat Burger, but Fat Brands is what it's called. Like I said, they're franchisees. It's not these companies specifically, just people that obviously franchise out and run these restaurants. Well, they filed for bankruptcy. They say they have debt of about $1.3 billion. It is a California based company, for those of you wondering. It oversees 18 restaurant brands and more than 2,200 locations worldwide. They actually filed for that Chapter 11 bankruptcy on Monday. They did it in Texas, no less. They do have a subsidiary. It's a Twin Hospitality Group. It's a Texas-based company there, but they spun off from Fat Brands back in 2025, and they did that to operate the Twin Peaks sports bar chain specifically, is what that group is doing. Well, they also filed for that Chapter 11 bankruptcy as a subsidiary. As of 2026, the company operates 114 Twin Peak locations across the U.S. and Mexico. This filing obviously is alarming. It came just months after the company announced plans to actually expand its fast food chain, specifically Fatburger. They're aiming to add at least 40 new locations in Florida, just Florida alone, folks, over the next few years, among other stuff out there. This is a big bankruptcy filing with huge debts. Fat Brands confirmed to Fox Business that its company was hit by common headwinds in the restaurant industry, obviously inflation, and they say declining customer demand for casual dining is a big part also. Fat Burger makes good burgers. It's just they're expensive as burgers. Fat Brands reportedly missed payments sometime before mid-November of last year for their debts. Reuters did note that the company only had $2.1 million in cash on hand at the time of the filing of the bankruptcy. Reuters also added that the company used some of its remaining funds to ensure that their employees get paid, right? $400,000 in recently issued paychecks need to not bounce when employees attempted to cash them. The franchisor, Fat Brands, well, they emphasize that its signature brands will remain open. I told you earlier, Fat Burger, Johnny Rockets, they do have Round Table Pizza as well. They're all expected to remain operating as usual during this Chapter 11 process. So it's not Fat Burger itself; it's the franchisees of them in Twin Peaks and everything. But alarming bankruptcy here for these guys with the debt and declining businesses, cash on hand, etc. And it doesn't get any easier out there. Maybe this is why consumer confidence is so down right now, right? Pinterest, they say they're planning to cut its workforce by 15% this year as well. Well, Pinterest does say that these cuts will allow it to reallocate resources to build out of its artificial intelligence capabilities. Pinterest is still based out of San Francisco. Maybe move out of that expensive place, right? But they disclosed the plan in a regulatory filing yesterday, noting that the reduction will affect, quote, less than 15% of the company's workforce, unquote. They say it will also include office space reductions. Pinterest is cutting costs to create more cash flow for AI focused roles and teams. Not only that, but AI products they want to add, and they want to help accelerate how it conducts sales with AI, according to the company's filing. So Pinterest, currently have 4,666 employees about. That's according to their filings out there. Pinterest restructuring plan is expected to be completed by September 30th of this year. It'll include pre-tax charges of about $35 million. They said they could go between 35 and 45 million as well in this reporting. So Pinterest laying off, that's due to AI out there. And we told you before, Amazon, lots of layouts out there. They announced about 14,000 back in October. Some of those are still being done here at the beginning of the year. But now Amazon has announced they're slashing that 16,000 more corporate jobs with this second round of layoffs for them. And it's big layoffs here for Amazon over the last 3 months. So Amazon said it plans to use generative artificial intelligence to replace corporate workers. It's also been reducing a workforce that swelled during the pandemic. And we're talking corporate side of things, not warehouse delivery or anything to that effect. Like I said, back in October, they did the job cuts, about 14,000 workers. Some of those are still happening right now. This is an additional 16,000. They're trying to get rid of a lot of the bureaucracy within Amazon as well. U.S. based staff would be given 90 days to look for a new role internally within Amazon. Those who are unsuccessful or to find that new job or don't want a new job, well, they will be offered a severance package to leave as well. They'll be offered outpatient services, health insurance benefits if they do decide to leave coming up here. So we're not done with the layoffs here as well. We're going to talk about another company here when we come back here at McCollum on Business. The good news and bad news here for UPS. We'll talk about that. I don't know if it is good news, but let's say medium news to good news, bad news here for UPS. We'll talk about that. Get into some local stories as well, folks. Come on back. McCollum on Business, Thursday edition. And we're back here, McCollum on Business, Wednesday edition. I think I said Thursday earlier. What day is it out there? Don't forget, tomorrow morning, Thursday morning, we're going to do another morning business show, 7 a.m. here live at Robat TV, as we're trying out the morning show here as well. So we're going to do it tomorrow as well. We got some positive feedback, and we see the numbers telling us that there's a clamoring for the morning show. So tomorrow morning, 7 a.m., of course, leads right into the main event out there. Then on Friday, we'll be back to 11 o'clock here as well here this week. So appreciate you joining us whenever you do. Don't forget, if you can't catch us live, on demand here at Robat TV, on the YouTube page as well here for McCollum on Business. The Real Matrix, you saw the ad for that. 14 episodes are out. New episode coming out this Friday, 10 a.m. here at Robat TV. Catch the new episode of The Real Matrix. The Angry Patriot just wants you to come into this with an open mind, as covers a lot of subjects out there. We got polio coming up, measles coming up as well over the next couple weeks. So, folks, catch that on demand here at Robat TV at 10 o'clock. And we'll be out in podcast form around noon on Friday as well, a couple hours later. as well for the real Matrix out there. And of course, the main event every Monday through Friday, 8 to 10 a.m. Me and 17-year NFL veteran Dale Hellestrate. Yesterday, Bruce Cooper joined the program for his normal Tuesday deal. He's back after his illness. And then today, Mike Sheehan, of course, head coach of Scottsdale Christian Academy, joined the show. Wanted to talk some Chicago Bears out there. And it's supposed to be a 30-minute segment. I turned it into an hour because we were just talking football, having some fun. Check that out right now on demand at Robat TV on the YouTube page as well. If you don't want to catch the whole episode, well, you got interview sections there as well with Bruce Cooper, Mike Sheehan as well in the interview portion of that. Or, just watch the whole show. It's entertaining. First hour is all about the Suns and NBA referees and how they just are ruining the sport of basketball even more so than they have in the past out there. Of course, out there. Pit stop coming up soon. We just got word that the Clash is probably being moved away from Bowman Gray for this year and moving to Charlotte. Nothing official yet. The rumors are out there. Don't forget to follow me at the Pit Stop Talk on X is where you can find that, or on Facebook, as we give you all the information you need for that show. That show is getting ready to kick off here for the 2026 season. So follow the social media for me, like and subscribe to it. All the racing stuff goes to that page. And of course, the Pit Stop coming back here at Robat TV here shortly as well. And we'll do that announcement there on X coming up here. Probably this weekend, folks, is when we're going to do that announcement here coming up as well. So all that being said, let's get back into the Market Watch. I said everybody's waiting for the Fed decision to come out. The expectation is we're going to keep everything where they are out there. And while we're waiting for that, well, the market's just there today. As you can see on your screen, Dow Jones is up 44 points right now. S&P 500 did hit 7,000 today, which is a record. First time ever at 7,000. Before it's kind of retreated back 5 points right now, 5.80 points backwards right now for the S&P 500. The NASDAQ is up 36 points right now for the NASDAQ. Russell 2K is down to 9. Everything's just trading close to even. Fed decision is waiting for. Everybody wants to see what that is. Bitcoin, well, it's in the 89,526,000 range right now for Bitcoin. So getting closer back up to that 90,000 level. As I said earlier, Tesla, Meta, Microsoft, all reporting their numbers after the bell today. So the market's also waiting for that. And as I told you in the first segment, our first story of the day, the expectation is everything stays the same in terms of the rate. The thing that investors are going to trade off of and move on the market today is going to be off of, as does the Fed chairman say anything about how long they're going to stay pat, any hints of anything of staying pat. So that's what everybody's going to be looking for later on today. Apple, well, they're set to report their numbers tomorrow on Thursday, which will be really, really watched here by the market as well. Right now, stocks we're paying attention to, VF Corp is going to be our first one, 9.37% down. Timberland, North Face Clothing is what this is the parent company of. So they're down here 9.42%, as you can see. Forecasting fiscal fourth quarter revenue growth of only 0 to 2%. Yes. Not good numbers. They've brought that number down compared to having a bigger growth number for them. Obviously, market does not like that. And then Street Count of Service did highlight, quote, ongoing pressure in activewear as the Vans turnaround remains strong. Yeah. They own Vans as well. And they're trying to turn that brand around. But 9.42% down here with the activewear market, having a lot of pressure right now. So VF Corporation having that negative today. And then let's go to storage companies, right? Like first one, Seagate Technologies out there. Well, they are up big today, 20.53% right now. They posted strong fiscal second quarter results. Seagate earned an adjusted $3.11 per share. The revenue was $2.83 billion. The expectation was $2.81 per share. Blew that out of the water there by, 30 cents. They blew that out of the water. They expected revenue of $2.73 billion. They came in at the $2.83 billion. Seagate has soared in terms of their stock side of things. If you look at the macro in the last month, 30% in the last month. That was before this earnings report. Now they're up 20% here today, 20.48% for Seagate. Interesting enough, Western Digital did nothing today. Let's throw up Western Digital stock. Direct competitor here to Seagate, do the same thing. Look at that. Western Digital's even up 11.68% right now as well. Interesting enough, Western Digital reports their numbers tomorrow. So big expectations on Western Digital based off of their competitor Seagate's numbers. Yes, earlier today as well. So no pressure, Western Digital. No pressure at all. Finally, we're going to look at Texas Instruments here. That's a chip maker, TI-81 calculators. Yeah, 9.66% up for them. They issued better than expected guidance for the first quarter. They see earnings per share between $1.22 and $1.48 per share. They see their revenue coming in between 4.32 and $4.68 billion. Analysts are expecting $1.26 per share. So on the low end of the expectation here that Texas Instruments came out with, and they expect revenue of $4.42 billion, which is about right in the middle of the consensus area of the earnings for for Texas Instruments as well there. So obviously the market likes to hear that 9.60% here coming up. The interesting thing here, Texas Instruments. So this is, um, what they're expecting for their first quarter. If you go back here in the fourth quarter, well, Texas Instruments missed the estimate numbers in the fourth quarter. So this is a big turnaround if they're expected to not only hit the expectation number, but actually exceed it as well, possibly compared to that fourth quarter. So that's quite the turnaround here for Texas Instruments over their fourth quarter. Now let's get into. We normally go straight to local stories. I got a couple national ones for you. UPS came out today, right? United Parcel Service. They announced that they're actually going to retire its fleet of those MD-11 planes, right? McDonnell Douglas planes. Um, this is just months, of course, after that one crashed off in Louisville on takeoff and killed 15 people. The Federal Aviation Administration has grounded all MD-11s after that crash. They did say the FAA said just yesterday that the FAA continues to review, quote, all the facts and circumstances in deciding whether MD-11s would be allowed to fly again. So UPS has just taken the kind of the bull by the horns and said we're retiring the whole fleet of MD-11 cargo planes in our fleet. So then you look up and say, who else flies a lot of MD-11s? Well, FedEx, obviously a UPS competitor, and a company called Western Global Airlines. They both fly those MD-11s, grounded right now because of that UPS crash there and everything, but they do still fly them. FedEx has said it is working with federal officials to address any repairs that may be needed to return those MD-11 aircraft safely to service. So it looks like FedEx isn't going to ground those planes and stop flying them, but UPS has made that decision. In other UPS news, just really quick, they're cutting 30,000 jobs also. Yeah. This is all due to that winding down that partnership with Amazon. And they also, UPS has a multi-year turnaround plan that they're trying to implement. UPS said it's identified 24 buildings for closure in the first half of 2026. I say there will be additional closures possible later in this 2026 year as well. Just last year in 25, well, UPS closed 93 buildings just last year. The planned jobs cuts come after UPS eliminated 48,000 jobs last year. 34 of those jobs were operational, 14,000 they were management. Interesting enough, when they announced those job cuts, they said only 20,000 jobs would be cut. They went to 48,000. Another 36,000 being sold to be cut as well here as UPS is trying to turn around their business as well. So kind of interesting stories there for UPS as they're trying to rebound out there. And here's one that's interesting. It does nothing to do with Arizona. It has to do with Chicago, where the Bulls and the Blackhawks play in the hockey side of things. But the United Center, well, it's stepping into new territory and what they're selling inside the United Center. They're going to become the first major U.S. arena to offer those cannabis drinks, well, at its concession stands. hmm This is interesting for a lot of reasons. We'll get into this here in just a minute, but it's a multi-year partnership with Rhythm. They're a hemp-derived THC beverage company. They make Rhythm and Senorita brand drinks. They're going to sell the cans at concerts and live events. They're inside the United Center. The beverages will be available to adults 21 and older. Of course, they'll be sold alongside the alcohol and everything else in there. Consumer interest in hemp derived products, specifically the THC ones, well, they've been steadily rising in recent years. According to a study conducted by consumer researcher Brightfield Group, uh, 14% of U.S. adults reported using some type of hemp derived THC product in the first quarter of 2025. A year earlier in 2024, it was only 8% at that time. So this is being done. The reason why this interests me a little bit more, this is being done because rules have been passed in states or being considered to pass in states to regulate these types of drinks with the THC drinks in them. And the United Center just went, we're going to go ahead and do it. And I can tell you, Illinois is currently bantering around a few laws to regulate where you can buy them, where you can sell them moving forward, right? Do you need a dispensary to buy this stuff? Those laws are out there, but the United Center said, you know what? We're going to bring it into our building regardless. I just find that interesting that they're doing that as well. So something to keep an eye on moving forward. And then we talked about Amazon's cuts earlier in the show, but one thing we know here in Arizona, well, they're adding to that warehouse, the big warehouse collection, I guess you could say, here in the Phoenix area. Every time we blink, they're buying another million square foot building or leasing one. Well, they have officially leased a nearly 1.1 million square foot building. It's called the West 202 Logistics Industrial Site. That's basically at the 59th Avenue of Van Buren, right off that 202 and where the I-10 meets is what they are leasing. They'll lease the largest building over there at that development. In 2025, Amazon was the second largest employer in Arizona. They basically claimed about 40,000 employees in Arizona as of the end of the year. Well, Amazon currently leases several million square feet across about 40 facilities, and it's all different, right? Warehousing, distribution operations that they do here in the Phoenix area. So Amazon continuing their growth here of warehouse space here in Arizona. And finally, just an update for you here. We know Honeywell, as we know it today, is being broken up into several different divisions, a la GE was a few years ago. Well, we know that Honeywell Aerospace is going to be based here in Phoenix, and we know it's going to operate here as the core of that business being spun off. Well, Honeywell did announce key leadership roles for Honeywell Aerospace yesterday, and it's going to become an independent, publicly traded company here coming up in this year. And they're going to spin off in second half of 2026 is when this is going to happen. So as I said, they're going to be headquartered here in Phoenix. They're going to trade on Nasdaq under the ticker symbol HONA. HONA is what they're going to be. So it's going to be a standalone company away from, of course, the parent company there. Honeywell Aerospace will be one of the largest publicly listed pure play aerospace suppliers out there. More than $15 billion of sales back in 2024. So it's not a small company by any extent of things. They obviously have a comprehensive portfolio of mission critical, market leading systems that they sell. Honeywell Aerospace's scalable technologies, well, they're featured on virtually every commercial or even the defense aircraft platform throughout the world. So it's a uniquely positioned company to capitalize on those long term growth trends that happen here in these industries. Well, they've officially named their presidents and CEOs of their business units out there. So what I found interesting was, it's one big company, and then they're going to have an electric solutions division that's going to provide integrated avionics, navigation, and even sensors. Electromagnetic defense and high performance space solutions will be that division. They have a new president and CEO. Engines and power systems, well, that's another division. They're going to supply propulsion systems, auxiliary power units, and even electric power solutions to their customers. And their final business unit, now it's control systems out there. They deliver mission critical thermal and motion control systems that's going to enable flight and life support and safety across all platforms of aircrafts out there. Though they named the president and CEO of those three divisions, they named a CFO for the whole Honeywell Aviation, getting him from Deere and Company, of course, John Deere, as well. Now they're not going to take over these jobs, obviously, until the split actually happens here, coming up second half of 2026. But they're starting to name key executives here for Honeywell Aviation that being separated out here from the overall Honeywell company as well. Now, the reason why we pay attention to Honeywell Aviation, well, just because it's going to be based here in Arizona, the only one that will be based here in Arizona in terms of the standalone spinoff companies from Honeywell. Hey, folks, I appreciate you joining me here for this Wednesday edition of McCollum on Business. We'll be back Thursday. Don't forget, 7 a.m. morning business show tomorrow. Come and join us here at Robat TV. If you miss it, catch us on demand as well on YouTube and also on Robat TV, folks. We'll see you tomorrow morning, 7 a.m. here. Call 'em on Business. Have a great Wednesday night, everyone.